I became interested in investing at a very young age because I'm really interested in numbers, but also words. So really the risk and return side, which is numbers, and then also the storytelling in terms of like words and markets and psychology and consumers. And I find the nexus of those two things really, really interesting, which is where I think financial markets and finance is really, really interesting. So the Australian small mid-cap sector is really dynamic. There's always new things coming out, there's always new ideas, new innovations, and leadership really changes quite quickly. But it is a really dynamic environment. There's a lot of high quality growth compounders that are in the Australian market that go like global and become real big success stories like ResMeds or Altium or WiseTech. Then you've also got momentum stories or themes that come through, like lithium last year was really significant. Consumer staples export to Asia was really significant a number of years ago, or education, fintech. So these new themes and new ideas and new innovations are really things that really keep me excited in the Australian market. What the Australian Future Leaders Fund offers investors is an actively managed portfolio of 40 to 70 stocks in the Australian mid-cap universe. And it is a portfolio construction process which is very balanced, so it aims to provide a smoother ride for clients on the way up and on the way down. Important criteria that I look at when I look at a company is what I call the three pillars. So viability, sustainability, and credibility. And these three pillars are about returns, the return level, the return direction, pricing power, the ability to hold those returns. Sustainability is about how long those returns last for. So is it 1 year, 20 years or more? And that is the second pillar. And the third pillar is really about credibility. Do you trust yourself? Do you trust management? Do you trust management to make judgments over those other two pillars? And once you've really taken your head through those three processes or those three pillars, you have a really strong idea about what you are investing in, why you're investing in it, and what the risks and return profile of the companies is really, really like. It is exciting. The 10-year anniversary comes up in September this year. There have definitely been some lessons learned during the last decade. The biggest one is probably valuations always matter. So the valuation level and the expectations that are built into the valuation really matter. The second thing which is really important is returns. Return level and the return direction really is what drives earnings, what drives multiples, and the market's perception of how long those earnings last for will drive what that level of the multiple can hold at. If people think the perception of duration's gone shorter, the multiples will go down. So that's really, the combination of earnings and returns and valuation is really what we've learned. And that's really helped us maintain the risk and return discipline within the fund over the last decade. So what attracted me initially to Fidelity is still what attracts me today. It's a 24/7 sharing of information for everyone to try to get it right on a regular basis. And that really is what is still very powerful on a domestic, regional and a global basis. It always shocks me when I send an email off to London or Canada late at night and I get an email response 10 minutes later that's really thought out, processed, this is the market structure, this is the return profile, this is my model. An analyst who's really there to help you make a better decision. And that is really phenomenal. That's very, very powerful as a portfolio manager to have that support right around the world. And that's what still drives me every day.